What's up, everyone? There we are. New day, new live stream. Okay, 1, 2. There we go. Put the light on. How you doing? Hopefully you're doing good. Price is moving. We hit the first area of resistance on my chart, so I thought it was a good time to go live and check what happens on the chart, right? So shut down the music. Put you guys on the chart as well. 1 hour time frame, zooming out. Oh. There we go. Welcome, welcome, welcome. Odin, John, Poimit, Legendario. Good to have you guys here. Welcome. So yeah, I just announced that I would go live, and a few minutes later here we are. So probably in the beginning it will be quiet, but more and more people will slowly join. Now, of course, as mentioned last week, I mainly like to go live if something happens on the chart, because if it's very calm, not too much happening, then I mean, it's better for me to put that time into stuff in the background that we are working on for you guys as well, like the Elliott Wave Compendium, the book as well, and other stuff. So it takes a lot of time. So, but yeah, bit of movement, and therefore it's interesting to be here for the upcoming hour. New York is opening now as well. So let's see if anything happens. Or are they open for already 1 hour? I always forget which summertime, wintertime, but hey, they're open anyway, either now or already for an hour. Heshan, good to have you here. Heshan Maduranga, welcome. So in today's live stream, we're going to have a look, of course, at the chart, mainly the lower time frame price action, 15-minute, 1 hour time frame. And I'll summarize the 4 hour time frame, and then we'll afterwards also discuss a little bit more about the content on the channel, because I get many questions, and I like about the content on the channel, not about necessarily the Bitcoin updates, because many people enjoy them. It's mainly about other stuff, and I regularly talk with you guys about it sometimes, but it might be interesting to look at ways to cover more different assets and make videos about them. It will reduce the frequency on Bitcoin, but if Bitcoin does anything, I'll always update Bitcoin first as primary, but then all the others have an opportunity as well, basically. And then I can make one update a day, but it will be different, and whenever something happens I can go live, but that's mainly Bitcoin. When I go live I usually focus on Bitcoin. So but yeah, we'll see that stuff we'll discuss later. Tanuka, welcome. Mando Tav, what's up? Siamak, good to have you guys here. Let's jump in slowly, as I can see more and more people coming in. It was not a long announcement before I went live. I basically put it out there. Like I think 10 minutes ago I put the planned live stream in the agenda, and then a few minutes later here we are. So slowly but surely people coming in. If you're here, welcome. Thanks for popping in. We're going to talk Elliott waves on the chart. And yeah, we got the move to the upside, which is, of course, very nice. Now we're starting to hit resistance levels. So then the question becomes, can we pass resistance? And locally, of course, preferably, we like to see a nice 5-wave impulse structure, right? 1, 2, 3, 4, 5. One more move up. And so far, it doesn't really look like just a nice 5-wave structure. 1, 2, 3. This then has to be 4, and this has to be 5 of C, of Y, of the biggest C in a triangle. Possible, absolutely, but yeah, if this is wave 4, it is very short in time compared to wave 2, even shorter than the 0.382, which is very uncommon for a wave 4. Nonetheless, we are at resistance, right? We are at resistance, so got to be aware of the resistance, but that was explained in the morning update as well. We're gonna turn off the point of controls here. Gonna make this one white now that we touched it. And we're gonna chat some waves. I'll put this one in here as well. Cool. Very nice. Good afternoon, Giannis. Good afternoon. Welcome. Welcome. I might actually get myself a whole bottle of water because I have like a small glass, but I already finished it. So give me 1 second. I'll get some water. I'll be back. Something else that's quite exciting, by the way, besides, of course, the chart, is that snowboard season here is not yet finished. I just got back from snowboarding holiday, and I didn't own a snowboard for a very long time. I used to be a teacher back in the day, had my own gear, sold it because I didn't really go anymore. But got some new stuff coming in 2 days. So I'm very excited to try it out in the mountains here, 2 hours driving. So that's going to be fun. Any other winter sport snowboarders, skier fanatics here? Like any skiers, any snowboarders? Let me know. Errol, welcome. Colin, what's up? Bullish, good to have you here. Christian, the hyper like button. Cheers, man. Okay, let's get into it, and then we'll get to the chatting and Q&A afterwards. Skiing for Power Meet, Hermes, the Mahala workshop. Welcome. So I'm gonna summarize the video of this morning, just so that the people that just woke up on the other side of the world, being the US mostly, you have the newest information. Or if you haven't seen the morning update, which was a whole 6 minutes, I believe, one of the shorter videos, then I'll summarize these folders, and then we go into the lower time frames. Just to let you know, we are at resistance. We were looking for that box to be touched. Bit more upside was the highest probability this morning from a Central European time zone standpoint, and we moved up and hit the resistance, which is very nice. So ski or die. First snowboard gear this season. Congrats, Kevin. Nice. Yeah, it's always fun shopping for snowboard gear. And I got myself some gear as well. It will arrive in a few days. So, if you're in France, let me know. Hit me up. We'll go snowboarding. Okay, let's... maybe I should do a Koens snowboarding trip. How about that? Snowboard and Elliott waves. We're going to do powder, snow waves, and Elliott waves together. Yeah, it's going to be educational, sports, fun. Hopefully no broken bones. Okay, let me fill my cup here. Ooh. And also, hopefully today I don't actually drop my water over my desk like the last live stream. Close the bottle. There we go. I'm down. I'm actually down as well. Yeah, it would be nice. Okay, get this started. I already said it 5 times. Let's start. So let's actually start. Always in a downtrend on the mountains, yes. So, but we're gonna start with the bullish scenario. It's in no particular order, but I just want to highlight both of the 4-hour time frame scenarios. And of course, this morning, we bullish scenario as well as the bearish scenario. In both cases, we were still looking for some upside. So that's the nice directional bias from an Elliott wave point of view. So therefore, I was personally most interested in longs, and now we're at resistance. So let's talk about the scenarios, what we want to see, what increases or decreases probabilities. What is the highest probability scenario, right? And let's start. So first of all, this is your low is in scenario. This is your bullish scenario. So here we have an impulse, a 5-wave structure. It looks a bit more complex, but you have to look at the yellow count. 1, 2, 3, 4, 5. That's your highest degree count. 5-wave move. After 5 waves, we want a 3-wave retracement continuation, right? Now you can see I have a couple of 1-2s of a different degree. So inside lower degree, right? Inside the yellow 3, we have the blue count. 1, 2, 3, 4, 5. It's a lower degree Elliott wave count. And inside blue 3, we have the white count. The reason that we have 3 different colors is because of all the overlap here, which then leads to a 1, 2, 1, 2, 1, 2. Those are allowed to overlap. And what we are waiting for in this scenario, so something that we want to see, is a fast, high volume, quick move to the upside in a wave 3. And then you start your 4 5s, which then gives you a very typical impulsive structure, being a bit of a grinding multi 1-2 structure in the beginning, a quick move up, and then you continue grinding in a couple of 4 5s. And just like shown in the morning update, what you see over here perfectly fits into that category. Grind with lots of overlap, right? You can see overlap all the time. Quick move up, and then you overlap again into your 4s and your 5s. Very, very typical impulsive structure. So one waits for the wave 3, high amount of volume to come in, and preferably for price to take out 95.1k, as that invalidates the bearish scenarios that are counted from an Elliott wave point of view. And probably, I can imagine at least, you've seen the bearish scenarios in other places as well. At least the better Elliott wave counters, I suppose, generally are quite in sync with what they are looking for. I personally don't really scan the internet. Plus, I was on holiday the past 3 weeks. I didn't see anything, so don't really know what's going on online. But in a bullish scenario, that's what you're looking for, right? Multi 1-2, big wave 3. You want volume to increase as price moves to the upside. Inside this white 3, actually, you can still have another 5-wave structure. Right? 1, 2, get your 3, get a 4, get a 5, and then eventually finish your wave 3. Okay. So that is your most bullish scenario. Now, interestingly, the short-term price action is very similar to the bearish scenario, as mentioned in the morning. In the morning, of course, we didn't yet touch resistance. We were a little bit lower, but we were still looking for price to move up. So in a bearish case, you're still looking for lower, right? Either a 3-wave structure, which then leads to a triangle in the middle, right? 3, and then you get your bounce and you look for price to move up, moving below 76k. In that case, a triangle has the highest probabilities, mainly because price here took out this low after a 3-wave structure. So that means that if we want to count this as a correction, the fact price took out this low means that this low has to either be a wave X, a wave B, right? Or a wave B in a triangle, so that works. So either wave X or a wave B. And the wave B can be a flat or a triangle. So let me explain. In a flat, you have 3, 3, 5. However, usually your wave C, right? That's your, let me remove the triangle here. So that's your A. This is your B, that's your C. Most commonly, your wave C is very fast, right? Very, very snappy, very quick. People FOMO into wave C, and then afterwards they'll get wrecked because price moves down again, right? That's the nature of a wave C. Of course, it doesn't necessarily need to happen all the time, but commonly your wave Cs are short in time, very fast, quick move to the upside, and then it goes back down, which is not the case here. You can see how much time it has taken so far to develop this structure. It's very slow. Now, it's still inside the boundaries of a flat wave C. So what I just did is I took a fib time from the start of A to the end of B and then double click here. So I am comparing A plus B in time against C. And preferably your wave C ends before a 2 fib time, right? So there's still quite a lot of time left, 1st of April, 10 a.m. It's just probability-wise lower probabilities that you have a very slow wave C. Besides the fact, by the way, wave C is an impulse, meaning wave C should look like this. So you have a triple 1 2 to start C. Then you get your 3 4 5 4. I mean, with all the 4 5s, generally wave 4s are longer in time than their wave 2s, than their wave 2 counterparts, which means that this structure in your 4 5s is going to be longer than this structure here, which means you're already going to end after the 2, which means wave C, low probability. So that's the reason why quite early on, like when price was down here, yeah, we still had a flat in mind. But the moment we started ranging here, I removed the flat from my chart because it's just not that relevant anymore. Now, alternatively, you then have your WXY, right? Because you can still label this a wave X, price taking the low, 3 wave up, 3 wave down. In that case, that is your W. So W is a zigzag, right? A, B, C, a zigzag in W, which means that in a sideways W, X, and then a Y, your wave Y is not allowed to be a zigzag. Cannot happen. Is not allowed. Wave Y can only be a triangle or a flat. Now that means that for a flat you need A, B, C, which currently is not a scenario that we are thinking about, right? Where this is A and this is B and then wave C. Besides, of course, you like your W and your wave Y to at least have a bit of similarity in time as well. So if we take a fib time start to the end of W to the end of X, toggle on this here, then we are already at almost a 6 fib time and we have not formed a flat. So incredibly low probabilities for a WXY with a flat in Y. Alternatively, you need a triangle here. Clearly, there's no triangle. So therefore, the only scenario that is left with this low, right, in a bigger 3-wave structure, right, becomes the triangle. So either we have an unfinished move to the downside, which leads to the triangle, if we want to count this as a corrective structure, or we finish something, that's your bullish scenario, as just explained, and alternatively, you still come down once more, but not in a triangle shape. It's the same movement as a triangle, as I will explain in a second. So making life easy though, if we look for a bigger 3-wave corrective structure, a triangle here is really the only one that works because we can't have a flat, we can't have a WXY. Now in the triangle, 4 out of the 5 waves need to be zigzag family structure, or need to be simple zigzags. So 5, 3, 5 ABC up, 5, 3, 5 ABC down. And if one wave is complex, double or triple zigzag, most commonly it's this one, wave C. Now in this triangle here, we have a simple zigzag A, simple zigzag B, double zigzag in C. We want to see simple zigzag D, simple zigzag E, down, take out the low, 76.5K. All right, so in other words, in this scenario, you're going to go sideways for probably 2 more weeks. 1.5, 2, maybe even more, right? The WXY is expected to be the longest structure in time because it's the complex structure. Simple zigzags tend to be shorter, right? ABC, ABC, W, X, Y takes a while, and then ABC, ABC, right? And then poof, and then you go down. So in this scenario, time-wise, probably be looking for another at least 1.5, 2 weeks to then finish E and start moving to the downside. Right? Range, and poof. Right? Now, inside wave C, WXY, double zigzag is then what we are looking for, which is what you see here. Let me have a look. Can I actually... Okay. I mean, it's very unlikely this is a 3-wave structure in an ABC, so arguably I can move the invalidation to the low of B, but let's just keep it at the X. That's your official one. So we have a 3-wave structure, ABCW, corrective structure in X, right? Can be anything. And then another zigzag in your wave Y, AB, and you look for a wave C to the upside. Common target area here is 89.9 to 91.9K for wave Y. Of course, you can also include the target area for your wave C, trend-based fib from the start of A to the end of A to the end of B. And the common target area for your wave C, let me put this in white. Oh, there we go. Is 89.4 to 90.9, which means this section here has overlap, which is nice. No? If we then look at the resistances in this area, then you can see that I have, one point of control, that one. There's one point of control that I have, which is because of the market sessions and volume profile indicator by Leviathan. So if I turn this one on, go to a 15-minute time frame, then you can see 1, 2, 3. There you go. So there's an added red line now. Let me move mine. So you can see the red line here. That is a weekly point of control from the market sessions and volume profile indicator by Leviathan. It's public. You can use it. And it's naked because you can see that as the week finished here, afterwards, we never revisited that area. So that is why I just like to have it on my chart. And it just so happens to be inside the box. So it's something that I at least keep an eye on. And then above that, just above the target area, right, we have 92.4 and 93.4 as important resistance, which is still perfectly fine for your wave Y. Wave Ys can go all the way up to a 1.618, no problem. But the problem moving all the way to this 95.3K level is that the invalidation for a triangle is this high. So it doesn't really work. So for a triangle, this would be the pretty much maximum area of resistance. If you pass this, then the triangle pretty much goes out the window because there's not a lot left, right? Now for the WXY, right, the minimum target for your wave Y has been reached, and now we are starting to hit resistances. So look, I'm not a financial advisor, but I at least, and I hope many of you have some experience of not longing in resistance or shorting into support. Again, NFA. If you want financial advice, you go to some studied person. Resistance, and you can quite clearly see there is a reaction here. If we can flip resistance into support, would be nice to have some bullish CVDs locally. Then next level, point of control, flip this, next level, right? So now we were looking for price to move towards the upside, right? We got to move to the upside. Remember last week, wait, do I still have it? No. Last week, if you go to my video, at least of last week, we had this, WXY, right? And then on my chart, I had a bold blue line, and I had the dotted blue line. Oh yeah, it was this, and then right, with the bold line being your higher probability. Now price moving down, price moving up, took out the high, perfect. But that now also means that we have to be very wary of at least the potential of ending wave Ys. So now I take it level by level. We'll go to the 1 hour time frame in a second, because inside a wave Y, you want a 5-wave structure in C. 1, 2, we can clearly see a wave 1, 2 here. 3, but we don't really see a wave 4 and a wave 5 yet. 1, 2, 3, 4, 5. It would be nice to still look for higher prices. Probability-wise, on a lower time frame, it would be better if we still see a bit more upside. Because how do we count a finished impulse here? It's very tricky. Wave 1 to the upside, wave 2 corrective structure, right? 2 hits the 618, very nice, all good, perfect. Price starts moving towards the upside. And then we need a 4 and a 5. 1, 2, 3, 4, 5. Most commonly, your wave 4 is similar, if not longer, in time than your wave 2. However, so far, none of these ranges are longer or similar in time compared to wave 2, which therefore lowers the probabilities that any of these ranges is a wave 4 matching this wave 2. Which therefore increases the probabilities to still get a 4 and then a wave 5. Now, if we look for a wave 4 target, then your target area is taken from the low of your wave 2, this one over here, to the high currently over here, right? And then your common target area is the white section. All right, 236.05 invalidation, 85.6 currently. And we preferably like to see a range, a retracement that is decent in size, comparable to your wave 2. Right? We can even take a fib time start to the end of 2 to the current high. Right? Toggle on the 1-to-1. So if it is similar in time, then it should end somewhere around the 25th of March, tomorrow, 5 p.m. Central European time, right? But the wave 4, of course, can be longer, maybe a little shorter, but, you know, want to have a good relationship between the two. So get a bit of a 4 and then one more push up in a wave 5. This wave 5, in the bearish scenario, ends your wave C, which therefore ends your wave Y, which therefore ends your triangle C, and then down you go. That's the bearish scenario for you. So in other words, would still be nice to look for a bit more upside. We are at resistance, however. So in other words, would be nice to maybe get a range and range and range and range. And then if we get some signs of strength, test it again and test it again, flip it, look for the next area. In other words, this is resistance. Interesting for shorts, not for longs, but I'm not actually interested in shorts just yet, to be honest. No financial advice. I just gotta repeat it. You know, in the end, there's always, of course, people that do trade according to someone else's analysis. I cannot recommend it because I'm not a financial advisor. So yeah, covered the triangle. This is your basically boring scenario, you know, sideways for a long period, and then down you go, and then it starts to get interesting because you take 76K. Now, the movement in the triangle is actually very similar compared to the next scenario coming up. So you can basically forget about what's coming up, but for the Elliott wave people, I want to cover it. So the ones to remember is the bullish scenario and the triangle with what we're looking for locally, which preferably is still a little bit more upside to get a decent C. And in the summary, I'll explain in just 2 minutes, 3 minutes what to look out for, right? So everyone is aligned. But in a triangle, of course, well, cool, we finish C, D, E. If price, however, continues to the downside, one has to be very aware of a diagonal. And this is a more bearish scenario, by the way, than the triangle, because this is a 5-wave move. And after 5 waves, we look for a retracement and another leg down to take out the low. Now, in this scenario, 1, 2, 3, 4, 5, you just look for this low of wave 3 to be taken at least one more time, minimum, and potentially twice more. Right, where you have this, you move wave 3 to the right, get a 4, and then another 5. The reason this is an alternative, right, in both cases you take out the low, by the way. The reason you at least should think about something like this is time. Take a fib time from the start to the end of 1 to the end of 2. Toggle on the 382, which generally is a minimum target for wave relationship. So I'm comparing 1 with 3 now. And you can see that this low is made before the 382, which is not too great for 3, right? 1 and 3 in one diagonal, 3 is incredibly short. But because in all cases you, in this scenario, want to take out the low, I just label it 5. And depending on the move up, we can always move our stuff to the right. Yeah. If we take out this low, then yeah, you'll see this scenario pop up in different formations. So, oh, and this wave 4 at the moment is exactly the same WXY as the triangle. Invalidation currently at about 91.7, 91.5. Okay, so summary. What to look out for and what should you know in order to trade safe. Cool. And let me, I covered this last live stream, but maybe it's interesting for me to cover how I approach my 4-hour time frame trading. So in the bullish scenario, what you want to see, what you need to see is a high volume, quick move up. If price does this, right, and we come down again, it's just shit, right? Because then you're going to have 4 1-2s and it just starts to slowly affect, it's still not the highest probability scenario, but it wouldn't be too great. Preferably, you just start to escape and get your 3, right? We have some news at the end of this week on Friday, but that's at the end of this week. This is really, really good news, probably volatility expected here, right? Yeah, you need a quick move up, and so far this move is relatively slow. So from a probabilities perspective, as written this morning, you can see it here, but I'll talk at the same time. The bearish scenario has a higher probability till proven otherwise. So I have no problem with price continuing to the upside. I explained I take it level by level, right? I would be happy if price continues. Take out 95.1. Look for a retracement, and that is where the swings become incredibly interesting. But as long as we don't actually get some decent move, it's difficult to be very bullish, right? So we have the scenario on the chart, preferably on the lower time frame. We still see a bit more upside, being aware that we are at resistance. I keep repeating it because we're finally at resistance. We were looking for price to get a 3-wave structure at least, right? And now we hit resistance, the box that we were looking for as well. Next area, 90.3. Next area, 92.4. And now it's about the difference between the bullish and the bearish scenario that you have to know. So again, bearish scenario will have higher probabilities, still proven otherwise. If we get the impulse up, right? Cool, very, very happy. Look for retracement and continuation. Area of interest for me, for swings. As long as I don't get that impulse to the upside, I'm just not interested to really look for swing longs. I'm happy to long here, which I did. But I'm not happy to try and get myself a swing long. I am incredibly happy to miss out on swinging this. I trade it on the lower time frames, right? No problem, but not for swings. Once we take out this high volume move to the upside, wait for 4 5s, get the retracement, swing area, price moving up. No? So not the highest probabilities, still proven otherwise. On a 1-hour time frame, if we look at the move to the upside, then from an impulsive perspective, we preferably still see a wave 4 and then one more push in a wave 5, as explained. This range is a lot longer than this one, and what's happening here, or what happened here. So low probabilities that any of these ranges is a wave 4. So far, this looks like a 3-wave structure, not a 5-wave structure. So from an impulsive perspective, still want to see a 4 and a 5. Wait for a range to form. Target area is between the 236 and the 0.5. Invalidation 85.6. Still looking for a bit higher. If this is a high and price comes down, I would still preferably count a flat here, ABC, and then move up afterwards. And then this is a 3-wave ABC. Even though wave C would be incredibly long, which is not really preferred. ABC, wave C is 2.618 times longer than wave A. Right, if you want to count this as a wave A, B, and this as a C. It's a very long wave C, and the moment you hit a 2.618, especially, so, I mean, this is educational. Live streams are more educational. If you want a very short version, just go to the morning update. But The moment you pass the 1.618 taken from the start to the end here, right? This is either a wave 1 or a wave A. This is a wave 2 or a wave B, and then you get a move up, right? Now, if price moves up and up and up and up, and we hit the 1.618 and price rejects, right? Then we either look, I'm going to explain this. So either look for A, B, and C. The 618, the 1.618, still a target for C. Price rejecting here, moving down. You want to invalidate a wave 4, meaning touch the 618. Probabilities then higher to take out the low, this low, and go lower. In this case, though, touch the 1.618. Bit of a reaction. We continued. The moment you pass the 1.618, the probabilities are higher. You are looking at a wave 3, not a wave C. It's all probabilities. We can never completely remove a wave C from our thinking. But from an Elliott wave, right, I didn't write the theory, it's just the way it is, point of view, the moment you pass that 1.618, a wave 3 has higher probabilities than a wave C. Meaning, you would look for a wave 4 and another wave 5 minimum, preferably 4, similar in time compared to wave 2. As long as you don't get a range that is similar in size compared to wave 2, one preferably continues looking for upside till the moment you get a 4, and then you realize, okay, we're looking for one more move up in 5. Now the question is, when does a wave 3 end? And that's a very good question because wave 3s can extend very far, right? And in the bearish scenario, where you look for a WXY and wave C and then end your wave Y, you want to have a 1, 2, 3, 4, 5 finished relatively soon, right? So in other words, you want to have this range. Hopefully I'm not going too in depth here. But you want to have a range for wave 4 relatively soon, no? So you have your 1, 2, 3, you want to have a 4 and then a wave 5. This range should mimic the size of 2. That's good. That's what we're looking for. As long as you get very small ranges, right, then from an impulsive perspective, it's low probabilities to counter the wave 4. All of these ranges are incredibly short. Fib time, start of 2, end of 2. Oops. Start of 2, click, end of 2, click. And you can see, let me toggle on the 382. This range shorter than the 382. This range shorter than the 382. All of this shorter than the 382. Low probabilities, anything here is mimicking 4 compared to 2. So therefore, probabilities are higher to still look for upside because now we know, based on our analysis, right, you know, okay, we passed the 1.618 trend-based fib from the start to the end of 1 to the end of 2, price moved above. Probabilities increase that what's happening here is an impulse wave 3, right, compared to wave C. Lower probabilities for a wave C because of the extension. Nothing's 0%, but probabilities are higher for a wave 3 because of how far extended this move is compared to the beginning. Now, with that in mind, we know that we need to look for a wave 4. Wave 4 is a range. Okay, then we also know that wave 4 should be similar in size, if not longer than 2. Check the size, check the size, check the size. Everything is smaller, right? Significantly smaller than a 382 as well. Meaning, preferably in an impulse, we are not yet finished with a wave 5. Wave 3 can be in here, wave 3 can be in later. You don't know. You just don't know. You just got to wait for the range, and then you label this 4, one more move up, 5, finito, okay, back. Right? But if we are looking in a more bullish scenario, you can have move up, another lock down, and then again, and then again, and then poof, and then you just go, right? And then, ta-da, multi 1, 2, and you just fly. Trading it is exactly the same, right? Which is nice, right? So trading Elliott waves can be very easy But of course, getting the knowledge is difficult, right? Trading it is not difficult. It's the knowledge that makes it difficult. There's so many rules and guidelines and relationships and FIPS and this and that, which makes it incredibly tricky. But as explained last week, we were looking for price to take out this high, which was on Friday, right? Looking for the WXY. So even in a bearish scenario, wave Y, we were looking for price to move up. Even in a bullish scenario, of course, we're looking for price to move up. Price is moving up. Like it's like directional bias. Both bearish and bullish scenario is looking up. And now still, based on what we did over here, your probabilities would still be higher to see a bit more upside. No problem to start wave 4 here, but then get another 5, finish 5, and then go back down. Or just continue. And if price continues, short range, continues, short range, continues, short range. Well, it's going to be easy. You're just going to move this way 3 there, and then there, and then there, right? And then short range. Oh, short range. Okay, short range. And then eventually you get a bigger range, right? And that is going to be the 3. Then you know your 4 because you just got to wait. And then you wait for one more 5. Now, depending on how big this move is, you know if you are dealing with a WX and a Y, and there you go down, or if you're dealing with the bullish impulse, 1 to 1 to 1 2, you get your 3, right? So price just goes up. No big ranges here, right? Up, 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 and then eventually you start getting your ranges again, right? Similar in size to these, that is. So you just go basically just follow the wave, no? Just follow price action, wait for a range to form, which if price is impulsive is always recommended from an Elliott wave point of view. Just wait for a range. And I'll just repeat it again in case people are like, oh shit. Yeah. First of all, not financial advice. Second, resistance. We are at resistance, not support. We're at resistance, right? Flip the resistance here. Cool. Next level. Right, 90.3. Flip 90.3, cool. Next level, 92, right? And see how far the wave goes. But probability's sake, locally, on the 1 hour time frame, preferably we're not yet finished. Still looking for at least a 4 and a 5, both in the wave Y and, of course, the impulse. On a 4 hour time frame, probabilities, Elliott waves, probabilities remain higher for a triangle, right, compared to the bullish scenario, unless you take out this high, and then we switch bullish. Now, that doesn't mean if we take out this high that we cannot trade what's happening here on lower time frames, right? This is 4 hour time frame. This is swing trading time frames, not day trading. Based on this scenario, I am not day trading. This is swing trading, right? So I'm in a long from a day trading perspective based on my 1 hour analysis, right? But I'm not swing trading it, but that's my plan. I'm happy to swing trade it if the probabilities on the 4 hour change. So on a 1 hour, you can have bullish probabilities, while on a 4 hour, you can still have bearish probabilities. The probabilities always change first on the lower time frames and later on the higher time frames. So the probabilities here change. If you take out the high, you get your impulse, wait for the retracement. That is where I am gonna get my swing longs ready, right? That's the current plan at least. And then I look for price to move up, and then we'll see how far it goes, right? 4 hour time frame trade, this one. This is not a day trade, right? This is a swing trade. This is something that should be in my Bluffin account for weeks. And then eventually you look for impulse 1, 2, or ABC, that's bearish, ABC. And there you go down. Or continuation, right? And then it becomes just a very big swing. But I am not interested in swinging along in a downtrend. I don't care about trying to snipe the low, right? I have taken longs and shorts in this area. I don't care about sniping the low for a swing trade. I care about winning. That's what I care about. I want to make money, right? And I prefer to give up RR over a lot more probabilities, right? So my probabilities are so much higher here Because one mistake, I just keep rambling, but one mistake that I made back in the day was trying to make my low time frame day trade a swing trade every time. Maybe you recognize yourself. And basically what then happens is you got yourself an amazing entry on the lower time frame, right? Or not an amazing entry, but you got an entry, you're in profit, price is running, right? It's doing well. And you're like, ooh, would the low be in, right? Did I just manage to like snipe the low, right? Is that it? Are we going to $1 billion, or whatever? And then sooner or later, price hit my resistance, and then back we go, and I either close at break even or I closed at a loss. That's bad. That's bad. For me, that was really bad. It hurt my psychology. It hurt my confidence, and I just had a wrong plan. So even though this could be the low, I am not interested to trade it as the low. You know what I mean? If price moves up, right, invalidate bearish scenario comes down, then I will trade it as the low. No? And there is no problem, I see it in chat. There's absolutely zero problem with sniping highs or lows, right? But in my personal plan, I am not trading a long here or here as a swing trade. I manage it so I can take profit at resistance, and I can leave some running and see how far it goes. Take profit 2, leave it running. Oh, bearish scenario invalidated. Perfect. I still have a little bit running, but it's not a full size anymore. I'm not full size swing trading, basically, right? That's just something I learned from my mistakes in the past, but everyone makes other mistakes and learns other lessons, but that's how I'm approaching it. So, yeah. That is it, basically. Yeah, I think I can get into some questions. So we know, based on the analysis, what we're looking for in the 4 hour, the 1 hour, and how I approach some of my trading on the higher time frames. Yep. Okay. Maybe a band-aid, yo. He kept his promise. Yo, cheers, man. Thanks for the gift, Jason. Appreciate it, man. Cheers. That means Adalol. Make sure to fill in the link, and we'll up you to silver. 07. Okay. That means, so, when did we start the analysis? I have no idea. I think somewhere here, 3:43. It's currently 4:18. So it's almost 40 minutes ago. 40, 36. $18, $17, $25, $35, which is around minute 20 or something we started. Yo, Sam. I'm not sure if it's 20 minutes. Maybe I started the analysis earlier, but better for people to jump straight into the analysis than still hearing me chatting and Q&A or talking with the people. So let me pin this. Yo, Sam, thanks for popping in and gifting, man. It's YouTube. If you're watching, make sure that your mods can't be gifted, but it's cool nonetheless. So because my mods they have all access. But yo, Sam, thanks, man. Adam, I'm not sure if he's here, but he got gifted. GTP Sleeper, Trevor Tabaka, Ganam Al Otibi, and Pablo G. You just got gifted by Sam. Make sure to fill in this link. Thank you, Jeroen. What's up, mate? And we will get you sorted and bump you up to silver, which is like short-term updates and me talking about the price action in between all of the content and during the weekend, and also when I'm on holiday, even though lower frequency, but I tend to still update regularly. So Okay, let me have a look at what's been happening. We were would like to ski in Japan. Oh yeah, I heard about the incredible snowfall in Japan. I don't know how many meters, but a buddy of mine said that there was so much snow that the lifts couldn't run in some areas because the lifts got into the snow. Whoa. I don't have a powder board. I got myself a true twin because I don't know, like there's a bigger hype now with directional twin boards where the nose is a little bit longer compared to the back. I don't know. I've always been a true twin boarder, never really got into directional twins. I just like, you know, like switch and I do like a bit of freestyle and stuff. So yeah. And for the first time, I actually got a board that has a 3D shape at the front, nose and tail, which should be very interesting. So yeah. For the snowboarders, you'll probably know what I talk about. What's up, Prof. Loki? How are you doing, David? Chilling couldn't stream if I don't stream. Wait, if you don't stream, wait. What are you streaming? Go to the channel. Hey, nice, man. Go. Almost at 3K. Almost at 3K. So you're going live as well. Bitcoin dominance, total 3. Elliott waves, ? Elliott wave analyst. Probably if you're hanging. Oh, I see the power of 3 there, or at least the colors. Fair value gaps. Okay. Interesting. Good stuff, man. Keep making content. It's the only way to improve, right? Like, sometimes channels grow very quick. Other times your channel will grow very slow. Same here. Sometimes the channel is growing very quick and sometimes the growth is very slow. But as long as you keep posting, keep informing, keep educating, keep adding value, you know, people will find you, and you know, it slowly and surely it continues going up. John, we love the in-depth analysis. I'm happy you do, man. Welcome, John. John from California. Sunny State. I actually saw the Golden State Warriors against the New York Knicks in New York. So I had to think about you. Dayon, welcome. XU, the volume of our wave 3 is high. Yeah, so I mean, you want to see it continue, right? So yeah, we have a volume peak into resistance, right? Into resistance. So we have some volume inside this resistance, some point of controls. And a point of control, of course, is a volume-related level. And once we hit the resistance, we get a volume spike. But we want to see it continue, no? In a wave 3. So get back above and flip it. No? Currently, we're still hanging around resistance. But yes, it is at least increasing. Madhavada, good day. Jeroen, of course, what's up? Just for fun, how likely is it that the correction locally actually ended on Sunday around 83.7 in a WXY, and then this current impulse we are told could be over? So the WXY, yeah. So when did I post the WXY in silver? That was that was during the weekend. There was another. Oh yeah, this was the first. The bullish and bearish scenario I keep an eye on. So this was yesterday. 21. That's 3 days ago. Oh yeah. So yeah, here I explained the move down, lower probability impulse because of 2-4 overlap. This is just a rule that's good to know, or a guideline. Like in an impulse, if wave 1 and 4 overlap, that's not allowed in an impulse. But if you want to count the move to the downside as an impulse, right? 1, 2, 3, 4, 5. This was before the weekend. But if you tried doing it, then you had overlap between your wave 2, right, and your 4. And there's a strong guideline as per Elliott Wave International. They even call it strong guideline. to not see overlap between 2 and 4 and an impulse. So this lowered probabilities for an impulse, and also the low here of your wave 2 for an ABC or WXY. It's incredibly deep. But that's something I covered in the stream last week. What's this? Oh yeah, that's the multi 1-2. And then if we go back above this high, probability is lower for a multi 1-2. Two scenarios I keep an eye on. WX, look for C, right? So that is what I was personally looking for. When was this? Yesterday. Alternatively, the multi 1-2. Here's the WXY. Maybe this was the first time I actually posted the WXY on my chart. And yeah, and then comes the rest. This was an alternative, just in case, was looking for price to move towards the upside. Now, WXY means continuation, take the high, but just in case, this was an area of resistance I found, and we could have a bigger correction. But of course, we moved straight through it. You got to observe the reaction. There was not really a reaction, so that was an alternative. So yeah, the WXY here, right? Very nice structure. Take out the high. What's the chance of this being a WXY? It's high, right? It's high. That WX and then a wave Y. And the reason why is that if this is not a finished, so the question is this a finished structure, right? Is this a finished WXY, or are we looking for a flat? Preferably, this WXY is finished and that's it. This is a separate structure, not related to this. Reason is that if we are looking for a flat here, ABC, then wave B, this structure, needs to be a zigzag family structure, meaning an ABC. A, B, and all of this has to be a wave C, which is very long for a wave C, because wave C went beyond the 2.618 trend-based subextension taken from the start to the end of A to the end of B. So it's a very long wave C, which lowers the probabilities. In an impulse, you preferably see another 4 and a 5, right? In a flat, this is fine. A, B, C, and then move up, not take this low. But yeah, preferably, this is a finished WXY because of the size of C here being so long that probabilities are lower, this is C, and are higher, this is 3. What's the chance of this being finished? At the moment, not high, because this is your wave 2, right? Wait, where's my 3, 4, 5? Oop, very high. We are at resistance, so this is not long territory. No financial advice, but for me. But then we have 1, 2, 3, 4, 5. Where is our wave 4? This is 2. Where's 4? Right? Is this 4? It's very short. This one also very short. This one also very short. Right? All of these ranges are shorter than the 0.382 fib time taken from the start to the end of 2. I can show you here. You can see it now. Right, so this range shorter than the 382. This one shorter. This one shorter. Everything is shorter. And most commonly, wave 4 is longer than 2. If not longer, then at least quite similar. Minimum would be ending after the 382, but none of these ranges finished after the 382. So yeah, if you do fall down, I prefer counting this as an ABC. It's just that probabilities are lower. This is C due to the extension, higher for a 3. So, and therefore you still look for another 4 or 5. Yep. What's up, Crazy Potato? Welcome back. Welcome back. I love sniping highs and lows. Maybe a Band-Aid also loves sniping highs and lows. And then it's about trade management, right? Then it's trade management. I will learn Elliott waves one day. Elliott waves is sprinting. I'm still walking. I mean, with the content, of course, if I explain stuff, sometimes it goes very quick, but also during live streams, if you are maybe a beginner or you're new or, intermediate, just ask questions. That's why I'm live. Like the videos are, of course, the core updates. During live streams, I tend to be a lot more educational and explain how I pull things and structures and rules and guidelines and everything. Siamak, sorry to ask this personal question, but what X leverage do you usually use? That's an interest. I should make a video about this actually. So the standard, the most used leverage in my account is 5, alternatively 10. However, I do not increase my risk by increasing my leverage. And this is a mistake many people make. They think, holy moly, 10x probably for many people, or 5x is not even high, but I use 5x or 10x, but I do not increase my risk because my size is the same. So for the sake of an example, let me not use the chart. So let's have an example, right? So let's put a 1% stop here. So, okay, this is 1%, whatever, 0.99, oops, normal trade. So very nice. So, okay. So price moves up, and then price moves down, and you enter, and then, you know, you want price to move up, of course. So this is a winning trade. Very nice. Now, in this trade, the stop loss is 1%. Okay, I just need to make it 1%. There we go. It's 1%. Now I can trade this setup with 1x, 2x, 5x, 10x, 20x, 30x. As long as my liquidation is not at this level, I can trade this setup with whatever leverage. However, and now we get to the juicy stuff. If you have a 100K account, wait, let me make this more normal. If you have a 1K account, right? 1,000, let's do dollars. Okay, you have a 1K account. You want to risk 1%, right? We keep it very simple. So 1% is your risk. That means your risk is $10. Now, I can risk $10 with 1x leverage. Why? Stop loss is 1%. So I can enter this trade, right? I can enter this trade over here with my whole $1,000. So my whole 1K goes into this trade, right? And because my stop loss is 1% at 1x level, yeah, let me do this differently. So I put 1,000 in, right? And I'm using 1x leverage. Because I use 1x leverage, I can drop in 1K, 1% of 1,000 is 10. So my stop loss, if touched, right, is minus $10. Stop loss touched. Now, what does this do? My whole portfolio is now in one single trade because I trade 1x. If I change the 1x to 2x, okay, then my total portfolio size is not actually 1K. Because I have my account on 2x, I now have 2K to play with. Even though only 1K of my own money sits in the account, officially I can trade with 2K now. No? Which means that in this particular setup, 1K goes in, right? It's still only 1K that I drop into this trade. So inside this trade, I drop 1K, but I still have money left. I still got money left in my account for other trades. So let me remove all of this. It's a lot of drawing. So we have 1K. Right? At 1x, 1% stop loss minus 1% is $10. Okay. Now, if I use 10x, right, and I trade this setup, I still enter with the exact same position size. I do not 10x my position size. It's still 1K. If my stop loss gets touched, it's still minus $10. The only reason to use 10x is twofold. Either to keep more money on the side so you can compound, or you can use money for other trades on other assets, right? Or you have decided that your portfolio is 1K to trade with, but you don't want to drop 1K into an exchange. You, for example, only want to drop $100 in the exchange. And you keep the other 900 in your own wherever bank, for example. Okay, wifey will say hi next time. So you put in $100, but you know that your actual trading portfolio is 1K, but therefore, well, 1% of $100, of course, is $1, but your total portfolio size to trade with is actually 1K. You put $100 in, you're going to trade 10x to mimic your 1K size, and then you just trade with a 10x and you risk $10 a trade. Right? So you're risking, with a $100 account, you're still risking $10, even though you only have $100 on your account. The other 900 is somewhere else. So using leverage can make you more flexible with your money management, but it does not have to increase your risk. And when you look at some of the peoples online, right, they trade with, I don't know, 80x and 50x and whatever x, and then they, probably try 20 trades, try to snipe the low or whatever. But, what is the risk? You can trade with 100x and risk 1%. It's still 1%. You can trade cross, which looks like 100x, but you're still risking 1%. And also cross works a little bit differently, but that's for another time, I suppose. So, yeah, hopefully, that question is answered. Let me put the resistance on the chart so we can keep an eye on it. There we go. So we have already covered this. Thanks, Sam, and maybe a band-aid again, right? Tino, how you doing, man? I'm doing very well. I just got myself from the wife a very nice chocolate tea. So I don't have tea, I don't have coffee, I have a chocolate there in the middle. Very nice. And it's the healthy one. It's self-made with, I don't know, like healthy stuff, like not the sugarish. It also tastes a little bit different, but it tastes very good. YouTube just told me I have gifts disabled. I had no idea you even had to allow it. Oh. I learned something as well. Was top 2 in the last SEA trading competition Bybit. For quite a while now. Good 7. Yo, Prof Lucky, eh? Top 2 in the last SEA trading competition on Bybit. Congratulations, man. Good stuff. Very good stuff. Do you use Elliott waves, Prof Lucky? Besides, I think a little bit of ICT I saw on your channel. Is that correct? Abdulun, how are you doing? You're helping me while you're far away from where I am. It's the benefit of the internet, isn't it? Cheers, Abdullah or Abdulun. Appreciate the message, man. Yeah, it's the beauty of the internet. And everyone, like many people are from many places here during the stream. Can we start an impulse after an impulse without correction? Yes, that would be a change of the trend. Yes. Also, a zigzag starts with an impulse, right? So you can have an impulse up and a zigzag down, but a zigzag starts with a 5-wave impulse. I meant, what if the move of last Saturday that you labeled 1-2 was still part of a longer that finished on Sunday? Oh wait, I need the chart here. So also so we wouldn't be looking for a 4-5 anymore. Oh wait, this is then part of a Yeah, I've considered it. But how do we end it? So then this has to be, you basically need to do this WX, and this has to be Y, A, B, yeah, C, D, E. You basically need to end here, but that's it's a very awkward looking. That would be a trial. A, B, no wait, A, B, C, D, E. Yeah, that's the only way to end it somewhere here for me. Is there any other structure? I mean, you can't have ABC. You can't have zigzag structures because you need to take out the low. You can't have a flat because we didn't retrace high enough. Can't have a triangle A, B, C, D, E, but that's just absolutely ridiculous. So that then leaves us with W. Yeah, W X Y. Yeah, so that would be the only way to try and end it there. That would be the end, and then you start counting an impulse here. So then you have your 1, 2, 3, 4. You can't really count this as a very nice, maybe an expanding structure or whatever, low time frame counting. But yeah, that would be a way WXY. But let's put it on the chart. If we look at some of the WX, I mean, if this is a WXY, then your X is very shallow for a sideways WXY because we have a triangle in Y, zigzag W, so it's a sideways WXY because W and Y are different. So preferably, by far most commonly, wave X should retrace to at least the golden pocket, right? 0.5, golden pocket, 786, 886. Only touch the 236, so this doesn't make sense. Now, alternatively, we can then have this WX and then wave Y, like this. Like that. I don't know. It's definitely not a very clean structure. It would be your bearish scenario. Again, that's why I also keep repeating we are at resistance. Just in case you do finish wave C here on a high amount of volume into resistance, right? So that's why during the analysis, I keep repeating we are at resistance, just in case that's the end and down we go. Right? If you pass the resistance, cool. We look for the next level. I mean, this would be the best shot, I guess. So zigzag X and then a triangle over the weekend, and then the move towards the upside, basically. So yeah. The weekend, so during the weekend here on Sunday, price moved towards the upside. Let's see, this is still Sunday. So this is where Sunday ended. So Sunday was definitely a move towards the upside, and I gotta be wary with weekend moves. But is it nice to end here with a triangle? No. Can we force it? Yeah, I mean we can force it. Wave X here hit the 0.5. But yeah, in a sideways WXY, 1 to the 1.236, X hit the 0.5. I mean, there's a chance. It's you can imagine it's not a great structure, but that would be the way I would count it. And if we go down from resistance, then perfect. Because in the end, the bearish scenario on the 4-hour remains higher probability till proven otherwise. So starting an impulse with a 3-waver. First one wave starting it. 5 wave there. Also, due to the price action that comes after, you can't actually count this as a 3 wave because then you need W, X, Y, X, Z or W, X, Y, X, Z, which is incredibly rare. I've never seen a W, X, Y, X, Z in my life, right? So even if you counted this as a 3 wave in the start, due to all of this, you're going to move into 5s basically, which then leads you to this, the bearish scenario, right? Finish wave C and down you go. Alternatively, the bullish scenario, lower probabilities. Now on a 15, I covered this with Overset Tim in Discord. We were having a look at this. So this move down here is very much a 3 wave. If we want to count an impulse, 1, 2, 3, 4, 5. Where is 4? Where is 5, right? So it looks like a 3 waver, but if this is a 3, it can't be a flat ABC. It can't be a zigzag, which means the impulse then ends here. And they have a W, X, and a Y, sideways. Flat in W, X, zigzag, Y, zigzag. So one of these highs is then the end of your impulse, which then basically gets you a 1, 2, 3, 4, 5. And due to the 3 wavy nature, one has to consider the modern diagonal, which is one of the new rules, well, new, it's already a few years old, of Elliott Wave International, where your 2 and your 4 do not have to overlap. 1, 2, 3, 4, 5. So, yeah. Last bear market, yeah, I still prefer a WXY over a WXY-XZ. But yeah, they're still incredibly rare. Even if you would count the bear market as a WXY-XZ, they are incredibly rare. Yeah. I think in the book of Elliott Wave International, they only seen it once or twice. They write about it. It's very rare. Yo, what's up, Julian from San Francisco? The bridge, always misty around that bridge, eh? At least when I was there, couldn't see shit. Mario, welcome. Welcome. Exactly, maybe a band-aid. I mean, you have great entries as well. I think the structure is a WXY and might break the low again. Yeah, that's the highest probability unless you get an impulse, but that would be very clear. So, the 4-hour bearish scenarios have a higher probability unless you take 95. And that's when the 4-hour changes. And on the 1-hour time frame, we are now hitting the resistances that we were looking for. So it's not, I mean, look, like this, now it's just trade management, if already positioned. If price can flip the resistance where we are now, then, cool, potential for another long, but we are now at resistance. So now is the potential, these are the turnaround areas, right? So this can be your tippy-toppy as well. And then, yeah, you would count some sort of a triangle here, WXY, that's your wave C, ta-ta, and then down you go. So, yeah, by all means, resistance. Resistance, that is where we are. We are not at support. What CVD indicator are you using? None on TradingView. I use one on AGGR, this one here. And this is a custom build. I actually don't know if... let me refresh this here. There we go. So, there you go. The bullish CVDs played out, and these ones already played out as well. But... yeah, this is the one that I use. I use AGGR, and for more information about that, you can go to Discord. In the description, there's a Linktree link. Just click there. Or maybe there's a CVD link as well, by the way. I think the first link is the CVD link. But then you go to the Good to Know channel, and then here is a CVD one-pager, right? Including the video about CVD on my channel. So that's the video there. CVD one pager, the link to AGGR, and the template without the lines and templates with the lines. Not yet the lines that move like mine do here, right? They adjust depending on where I go, but yeah, at least you will have lines. Chocolate tea, chocolate milk. Average Kato, welcome. Every wave in his move of the low, very 3 wavy on the low time frame. Whole thing counts very good as a diagonal. Could be C of a running flat in B. Well, if this is a diagonal, then you'd probably look for a 1, 2, 3, 4, 5. I don't really want to end it here then. Right, 1, 2, 3 is very long, so it makes more sense. 1, 2, 3, 4, and then you look for 5. If that is the case, just doing some quick checks here. Yeah, so far it would be allowed. It's not the highest probability that I personally keep an eye on, but there's no invalidation. So the WXY is for me currently higher probabilities in the overall context. But wave 4 is shorter than 2, 5 is shorter than 3. The channel that isn't touched, right? Wave 4 didn't touch the channel as well, so there's no invalidation. And then of course, so all of the waves have to be 3-wave structures, right? So this is 3 and then zigzag family structure, 3 zigzag family 3. Right? So all of them have to be 3-wave structures. Yeah. Yep. ICT got lucky. Don't humble your skill, man. I use ICT base support resistance price action Elliott wave 6 years same strat. Yeah, but that's the way to go. No, like that's the way to go. Once you find something, I mean, why try to innovate it? Just stick with it. You know, if it works, it works. And as long as it keeps working, yeah, gotta enjoy it. Can we not have a leading diagonal? This is the end of wave 3 for the entire move of the bottom. I mean, so that's a variation. So then you look for 1, 2, 3, 4, 5, right? Before I start considering a diagonal like this, I want 4 to be finished. So it's too early for me to count 1, 2, 3, 4, 5. It's too early days. Then this has to be corrective. This move down needs to be a corrective move down. Let me see. I think 3 should be shorter. Yeah. So no invalidation, but it's a bit too early for me to talk about the diagonal there. It's still warm. Mellow. I should actually do more, how do you call it? Like shared streams and stuff. Oh, we completely forgot to talk about the channel content things. I'll cover that in a second. I'm almost at the bottom here. I was thinking either way you put or some sort of running X. Yeah, I also did not really go into too much low time frames. Like the 15-minute is as low as I go, but I gotta say that since I'm back from, well, when I was in the US, I mainly for myself covered the 4 hour, and if I updated silver, it was mainly 4 hour time frame stuff. And I've always enjoyed the 1 hour and the 4 hour time frame. It's more calm. It's I don't know, it's just easy, right? So it's a lot more clear. Things change less quickly, of course. But I don't mind counting the low time frames. 50-minute, I've done that for a very long time as well. But I enjoy the 1 hour and the 4 hour. And since I'm back, I've mainly been looking into the 1 hour. So that's why this morning update, I only covered the 4 and the 1 hour again. And in both cases, we were looking for price to move up, and now we're at resistance. So the 15-minute, right, like 1, 2, 3, 4, 5 potential. If we do finish here, then yeah, you can have a finish structure. But the 1 hour time frame will kind of like tell us we are at resistance, not a place to long. No financial advice. You do you. If price continues, you'll be happy. If price dumps, you'll think twice next time. And we are at resistance. So this is the box that, we were looking for price to hit the box. We hit the box. Price moved up. The end of last week, the WXY, looking for it, as well as potential, a bull, an impulse. But now that we're here, got to take it level by level. All right, see if price can pass this. If so, next up, 90.3. If so, next up. And now it's just chuck, chuck, chuck. Right, see what it does at each level, basically. So, and yeah, I don't know, the 1 hour, it's nice. It's nice, the 1 hour. And also it gives a bit more time to do other stuff. So instead of trading or sitting behind the chart, I mean, I traveled to US while keeping an eye on the 4 hour, snowboarding, keep an eye on the 4 hour. Yeah, it's good. It's nice time frames. Emmanuel Ewuga. Welcome, sir. Just want to appreciate you, Koens. Always learn new stuff from you. The Wave 2 relationships, quite with a 4, you mentioned is a great take home. I'm happy you learned something today, Emmanuel. It's something that is not really known very well, but if you deep dive into the Elliott Wave International stuff, you'll find it. But generally, it's not really written on other websites. So yeah. Glad you picked that one up. It will be very useful in your analysis as it just changes probabilities. If wave 2 and 4 overlap, you're unlikely to have an impulse. Martin, if it's C and it's completed now, then we are looking impulse down under 76. No. Not a straight impulse. You would either look for a D now, in that case, so a zigzag in D, zigzag in E, and then down. Of course, your wave E is not allowed to go above C, right? So if this is C, then your wave E has to end somewhere here, no? And alternatively, you get impulse down, correction up, right? A smaller move than an E, and then you just continue. So not a straight move down, but it would start with an impulsive structure because you're looking for a zigzag both in the diagonal as well as the triangle move. Yes. So therefore, what you're basically looking for on a lower time frame, right? On a lower time frame, you're looking for at least a market structure change. Get a 5 wave, 1, 2, 3, 4, 5. Correction move up. This gives potential for a short, and then looking for price to move down, right? I mean that's how I approach things. I'm not interested in sniping the high or the low. So in my case, I would be that person that's like, okay, show me weakness, 5 wave move up, corrective structure down. Okay, perfect. I'll enter my short and I'll look for price to move to the downside. I have absolutely zero interest in snipes. So I am not this one. That's not me as a trader. I want a bit more probabilities on my side. So I preferably see a steep move down. Corrective. This is easiest to recognize. It's the corrective move, right? Corrective move. So corrective structure to the upside. And then just somewhere in that corrective structure, positioning, look for price to move down, minimum target, take out the low, and other targets are going to be other boxes, support, resistance areas like this one. And then we'll, if we do get a move like this, then we'll have support resistances. Let's see what we have here actually. Turn everything on. Oh, this one is already touched. This is not really target box worthy. Weekly naked point of control and the daily. That could be, of course, interesting to get a bounce and then another move down. So 1, 2, 3, 4. Oh, wait. If bearish, we're just talking bearish. You want an impulse up, corrective move, down, corrective move up. That makes it interesting to short. And then look for a wave 3 or C. That's why management is important. Minimum target is this low. If this turns into an ABC, you look for continuation up. That's bullish. So that's where management comes in. Right? You're not immediately looking for a wave 3 down. Can be, right? But you don't want to get wrecked during this. You're running in profit, and then price turns around and stops you out, and that sucks, right? So the moment you have a 5 wave, always consider an ABC, right? Always consider an ABC. And the 1-to-1, I just see 1-to-1 in the chat, but you can take a trend-based flip from the start to the end of the move down to the end of the move up. And then around the 1-to-1 is always important because that's your common C target. But anyway, if you do get an impulse down and we continue 3, 4, 5, correction, right? This has to be a corrective move. Whatever happens here, and then you look for price to move down again. So as price moves down, I'm interested, of course, in TPing at my levels of interest, close, and then if price bounces up correctively, cool. I'm looking for another move down and look for lower prices. So for me, what's easiest in my trading is I'm recognizing corrective structures. That's easy. You don't need to know necessarily what corrective structure if you're relatively new or intermediate. Just the fact that you can identify a structure as a higher probability corrective move will help you in your trading. So, for example, the fact that this structure, right, this was a higher probability corrective move. Why? Because of, and we go up again. I showed this earlier in the stream, but for the ones maybe just joining. Where is it? Oh, here. Why? Because wave 2 and 4 overlap. That's one thing, which is a strong guideline of an impulse is to not have 2, 4 overlap, lowest probabilities. And the second reason is your wave 2 has a very deep low here. So this is like either an ABC or WXY, very deep low. Beyond the 1.618 Fibonacci from the start, so the end of your 1 to this high, just, impacts probabilities. So that is why longing was very interesting. And then you had bullish CVDs as well here. Let me show this. There you go. Bullish CVDs. So you now know that the probabilities here are higher. That's corrective, right? You get yourself a range. You get some bullish CVDs. And now we're at resistance. So it's easier to recognize corrective structures because impulsive rules are very clear and guidelines, they're very clear. And if you do not see those rules or guidelines respected, you got to think, okay, this is very likely corrective. And then you can counter trade the move, basically. So we have a move down, we're countering, we're looking for up. No? So, yeah. Where were we? 236 retracement is allowed as time would compensate for the price. are you talking? Oh wait, WX. Oh wait, if you do this, WX, and then this is your triangle in a Y. I think that's what you WX. No, wait. What were we doing? Is this one? No, it's not this one, right? Oh yeah, that's actually, we didn't check it. If you want to count this as if this is your W, that's your X, and this is your Y, then Y didn't hit the 618. However, if we count WX, and then this is your Y. So it's true that triangles, if not deep, they make it up in time, right? If you want to count a triangle here. But here the triangle forms at the common target of Y, taken from start to the end of W to end of X, between the 1 and the 1.236. So yeah. And then you look for a move up. But yeah, it's a very awkward way. Like a side, so a WXY, right? If you look for a WXY, where W is a zigzag and Y is a triangle, you're talking about a sideways WXY. And a sideways WXY, preferably what we then see is WX, even X a little bit higher would be nice, but okay, X, and then wave Y, right? So your Y is, you create a range. I don't know, this, it feels sharp. It feels a bit sharp. Would be nicer to get a W, then an X, and then a wave Y, or I don't know, it feels deep. Not too big of a fan of a WXY. That's basically what I'm saying. I'll consider it if we turn around, but if we don't, then no. Bloop. We already covered some of the things here. Can two corrective structures occur in a WXY? Yes, that is also exactly what a WXY basically means. So the simple structures in Elliott waves is a zig. Wait, let me do this, I suppose, more accurate. A zigzag. No, okay, let's just, straight line is an impulse. Okay, so we have a zigzag. Simple structure. Then we have a flat. Ooh. All right. And a triangle. Oh. There we go. Oh. So these are simple Elliott wave structures, quote unquote simple, because a triangle is actually really annoying. Triangles tend to be very tricky. But okay. Anyway, a WXY. So these are single structures, right? You have a zigzag, you have a flat, you have a triangle, and you have the WXY. A WXY combines these, right? Combination. And then you, of course, have two different sort of WXYs. You have the sideways WXY, and you have a sharp WXY. They're significantly different in their appearance and also their rules. Okay, so in a sideways WXY, your wave W can either be a zigzag or a flat. Either the flat or a zigzag. Wave W cannot be a triangle, ever. Okay. Then we have wave X, which can be anything. And then we have wave Y. Wave Y can be a zigzag, a flat, or a triangle. Wave Y can be all three. However, if wave W is a zigzag, wave Y cannot be a zigzag. In a sideways WXY, right? Where wave X, preferably wave X, moves quite high compared to W. So generally, in a sideways WXY, your wave X retraces to at least the golden pocket, 786, 886, sometimes even takes out the start, right? 05 would be like a minimum. It would be a minimum. So your wave X preferably retraces high compared to your W. It would be an added bonus if your 0.7 hits the wave X hits the 0.7 fib from the start to the end of W. Why? This 0.7 Fibonacci decreases probabilities for a sharp WXY. We'll get to that in a second. So in a sideways WXY, just to repeat, W can be a flat or a zigzag. Wave Y, X can be anything. Wave Y can be a flat zigzag or triangle. But if W is a zigzag, Y cannot be a zigzag. It's not allowed in a sideways WXY, which is completely different to the sharp WXY. Because in a sharp WXY, which is also known as a double zigzag, which kind of like, gives away what it is, wave W has to be a zigzag. Wave X can be anything, but commonly a zigzag. Same here, by the way. And then wave Y has to be a zigzag. But you can see that this is a sharp move. This generally channels very nicely as well, right? This channels more horizontally. This channels more diagonally. No? And what you want to see in a double zigzag is the 0.7 is preferably not touched in your wave X. So you retrace to 236, 382, 0.5, golden pocket, but not the 0.7. The moment a 0.7 is touched, probability significantly decrease for a double zigzag and then increase for other structures like a sideways WXY. Right? What was the question again? Can two corrective structures occur in a WXY? So yes, they can, because that is also what WXY means. Two corrective structures, meaning you are combining two of these, and wave X is the in-between wave, basically. So, yeah. Jeffrey Kennedy said W can be a triangle. I don't know where he studied, but no, he used to work for Elliott Wave International. But that's, I don't know, I've never heard that before, and I will definitely not accept that unless there is some written proof or statistics about it. So based on pure Elliott wave, right, traditional Elliott waves, wave W can only be a zigzag or a flat, not a triangle. So that is either he counts it wrong, either he counts it wrong or maybe he built some stats or whatever. But if I don't have proof of something, then that's I don't accept that. W a triangle, I cannot see that happen. Never seen that in my life. So sorry, Mr. Kennedy, but we agree to disagree. Unless you send me some data, well, I'm happy to learn something new. But traditional Elliott waves does not allow it. Should we short just now? That's up to your own trading plan. I'm not a financial advisor. I also explained how I would approach a short, in my opinion, which is definitely not what you have to do. But in my case, I'm not someone that snipes high or lows. This is my plan, right? Not your trading plan. I have no interest in shorting. I am very happy to miss the move down if it comes down. But if there is a corrective move up, right? Corrective move up, oh yeah, you'll bet I'll be in. But I have more probabilities on my side. Lower chance of losing, higher chance of winning. Impulse down, I can count this. Corrective move up, I can count this. Once probabilities are higher, this is corrective. Position, minimum target, other targets, happy days. Yo, Adam, you got gifted. earlier today by Sam. So as a mod, you are now officially a member. What's up, Adam, man? I was curious if you've considered we finished macro wave 4 and now are in wave 1 in a leading diagonal with wave 1 of diag finished on the 14th of March. Wave 1 of the diagonal. Okay. Yeah, so in that case, if that's your 1, probably this is 2, 3, 4, and 5, right? So this is a valid diagonal. Now, diagonals, right? This is a leading diagonal. A multi-1-2 has a higher probability than a leading diagonal. That's just basic statistics, right? In this scenario, though, which is not invalidated, 4 is shorter than 2, 4 did not hit the trend line of a channel, and 5 is shorter than 3. So it can work. But then you need a corrective move down. Right, so to at least a 382, sitting at 84.1, right? That would be a minimum target. So you want a corrective move down, preferably deep. Corrective move down. We got some nice support here. And then an impulse up. Now you can see that this mimics, right, triangle movement as well. Because in the triangle, you would label this as a C. This is D. And then the difference between the scenarios is this one. In a triangle, you're looking for an E, and then you move down, right? While in an impulse, you look for 1, 2, right? Maybe another 1, and continue. So if this is a diagonal, you will only really figure that out over here. Now, if price moves down and takes out the low over here, or at least changes the structure. So in other words, let me Control Z all of this. Pum, 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 pum. So if price moves down, right? And this structure to the upside, right? So a multi-1-2 is basically invalidated. Price moves down, you change the structure, etc. Then yes, the only bullish scenario remaining is counting this as a diagonal. But a diagonal here mimics the price action of a triangle. So you're going to have similar price action, which actually makes it easy. And then later we'll know if we look at a diagonal or the triangle, or, you know. So, yeah. One-to-one of the 3-wave on the chart looks likely. Crypto Sir, welcome. Mari, cheers, Mari. 1-to-1 of the last 3. I do know that there's a 1-to-1 at 89.3. Maybe that's the one you talk about. Dexter, what's up, man? What levels are you looking for the upside here? Haven't watched your video yet of today. Just joined the stream. I mean, basically, they're on the chart. So we are currently at resistance. This is a box that we've been keeping an eye on. Above that is 93, and above that we get to 93. So this is 90.3, and this is basically 93. But we are currently at resistance, and this is a level that we've been keeping an eye on. So yeah, resistance currently at resistance. Resistance. So let's see what happens very locally. Yeah, I'm not, so even though we have some bullish CVDs, I'm not interested. So what I want to see is, I want to see more of a range, right? I want to give it more time. This is 5-minute, very low time frame. So give it time. So after you hit resistance, new high is formed into resistance, wait for more price action. This is not interesting to me. It can easily be leading CVDs as well at resistance, as people are taking profit. People taking profit also means people are selling. People market selling basically means CVD goes down, creating a bullish divergence, but it's leading. So it's actually not moving up. Price is going to follow the CVD line. So Do you have an Elliott wave count for Bitcoin's whole history? Would be interesting to see what wave degree we might complete this bull run. Yes, it's still unchanged. It's just such high time frame that it barely changes. Let me just go to my channel for a second here. And then there you go. 3 months ago, latest video, but nothing changed. So yeah, that would be the one. There. What is it? 11 minutes there. Yep. What's up, Adam? I swear you have a good heart. Cheers, Abdullah. Appreciate it, man. Aiming to help. Aiming to help. Do you see a triangle from the 27th of Feb to the 7th of March? 27th of that is this one. So I covered this in the in my analysis this morning and earlier in the stream as well. Okay, everyone, it is 5:30 at the moment. We have been online for 2 hours. Solid stream, I'd say. Solid stream. It's time for me to get my ass to the gym. And after that, continue some other stuff, work-related stuff. And tonight, hopefully I can read a bit tonight. I'm currently rereading this book. I can really recommend it to everyone. Wait, where's my webcam? Well, it's behind the chat. So, Essentialism. Such a good book. I read it once. I'm reading it again with my KLM claim tag from my travels as a bookmarker or read marker or whatever. But yeah, Essentialism, the disciplined pursuit of less. I don't have an affiliate link. I'm not affiliated. I just share what I'm reading. And I also have some other books, but that I'm gonna read after this one, but they're not in my room here. They're not in my office. No, they're not here. So I got the books of Alex Hormozy, the one about offers and the one about marketing, I think. I need to learn more about marketing. I need to study more about YouTube and thumbnails and that sort of stuff as well. Because in the end, of course, it will help. The more people watch the content, the more people we can help learning Elliott waves, which hopefully improves their understanding of the market and their trading. I want to see more green numbers. I want to see that account growing. That's the goal. So, thanks everyone for being here. Thanks for asking all the questions. Had a good time. Hopefully you too. Now we do have some interesting news on Friday. So Friday for me, oh wait, I do have guests on Friday. Ooh, I'm actually not sure if I can be live that day. No, I'll update you. Well, probably in the upcoming days, I have more clarity about how my Friday looks because my family is flying over on Thursday. So they are here Friday to Monday. More about that another day. So Nick down 5%, guy comes back 8. Yeah, that sounds like high risk trading. I for the VODers, that sounds like a lot of risk in your trading, -5 to +85 in a short period of time. But hey, congrats. Trade safe, take some profit, enjoy the money, right? Trading is about money. So get the profit, share, have a dinner, do something with friends, whatever. Make use of it and save it or invest it. But okay, time for me to call it a live stream. So thanks for hanging out. And I'll see you at the next live stream, everyone. Thanks again, and cheers. Trade safe at resistance.